Hi everyone, Rosa here with CreditXpert. Today I'd like to talk about authorized user accounts. So the common misconception is that authorized user accounts are factored differently into the score than maybe another credit card from which your borrower is financially responsible. But the scores that are used in the mortgage industry are quite dated. And in those scoring models, right, the standards in the mortgage industry, those accounts are considered no differently than another account on the credit report for which they're responsible. So recent models like FICO 9 considers things like piggybacking, industry issues like that, and they've adjusted those models to be impacted by that. But the models that are currently used in mortgage, the standards anyway, they don't treat those accounts any differently. So one of the things to remember with authorized user accounts is there's an area for opportunity for improvement when it comes to authorized user accounts, both for accounts that are already reporting and maybe adding an authorized user account to your borrower's credit report. So I just wanted to give you an example here of what you can do in the CreditXpert What-If Simulator. So on this particular profile, they have a 691. They have a couple authorized user accounts reporting, but the one I want to focus on is this Bank of America account because it has some late payment history. So that late payment history is being fully considered by the score as if this person was late on their payments. So we can simulate two things in relation to authorized users in the what-if simulator, and that is removing the account. So in this case, we would forecast a 722 for removing that authorized user account. And the other thing you can simulate is terminating the account. So sometimes when the attempt to removal is made, the Bureau will report it as terminated instead. It's important to understand that that can occur because obviously the outcome, right, from termination or removal is different. Terminated just means that that ECOA code is going to be updated to reflect the account was terminated. Maybe the balance will be removed. That late payment history information is still going to be reported. So terminated or deleting are the two things you can simulate. And as far as impact, I've seen impacts of greater than 100 points, right? Maybe someone was added as an authorized user on their aunt's account 10 years ago, forgot all about it. Their aunt went late last month, or maybe she let that account go charged off. That charged off account is now reporting on your borrower's credit report. So getting that removed through the rescore process is typically pretty easy. One thing you should note is if there are late payments being reported, Experian has a standard policy in which they don't even report the account. So that may be a reason that the score is so dramatically different for your borrower. If Experian is much higher and there's some negative authorized user accounts reporting on TransUnion and Equifax, deleting those accounts may provide a benefit on those bureaus as well. The other thing you should know about authorized user accounts is that you can simulate the addition of them. So maybe if your borrower has a thin file, this is especially true if you're dealing with a joint application, one borrower has a thin file, most of the accounts are in the other borrower's name, you can simulate the addition of adding your borrower as an authorized user. You just need to know the credit limit, the current balance, and the month and year in which that account was open. And that's typically found right on the credit card. So let's go ahead and assume that it's a $2,000 credit limit, no balance, and maybe it was opened just a couple years ago. And it changes the time frame because you can't rescore the addition of an account, right? You have to wait for that account to be reported. So we have to wait 1 month, up to 1 month for that account to show up in the credit data. So in this case, adding the authorized user didn't help them, but this isn't a thin profile. It wouldn't, in most cases, be expected to provide much benefit. But the advantages of adding an authorized user account versus opening a new account are twofold. So opening a new account is going to generate a hard inquiry, where adding them as an authorized user account, since they're not financially responsible, there's no inquiry that takes place that's going to get reported to the credit bureaus for adding them as an authorized user. And the other piece is that they typically report quicker. So instead of going through the account approval process when opening a new account and then waiting for the first statement to be generated for that account to be reported, what's going to happen is that when they're added as an authorized user account, depending on the time of month and the statement generation date on that account, the next statement generation date is when that's going to be reported to the credit bureau. So that's typically a little bit quicker than opening a new account. I believe that's about everything you'd want to know about authorized user accounts. If you have any questions for us here at CreditXpert, please don't hesitate to reach out at info@creditexpert.com. Have a good day.